Podcast Episode 1, Understanding the UAE's Electronic Invoice Mandate. Welcome, listeners, to the first episode of our special series, Unpacking the UAE's Electronic Invoice Mandate. I'm your host, Your Name, and today we're diving headfirst into a topic that feels technical but is absolutely vital for businesses in the UAE, the new electronic invoicing system. Now, you might be wondering, why should I care about electronic invoices? Well, if you're operating a business in the UAE, whether you're a small startup or a large corporation, this is going to affect you. It's not just about adapting to new technology, it's about staying compliant with legal requirements and enhancing your business processes. In this episode, we'll break down key points from the official document on mandatory fields for electronic invoices so you know exactly what's required and how to ensure your business is ready as we move toward the deadlines outlined by the UAE's Ministry of Finance. Segment 1, Purpose of Electronic Invoicing. To kick things off, let's talk about the purpose behind this new mandate. According to the document we have, this initiative is designed to streamline the invoicing process across the UAE. The mandatory fields for electronic invoices serve as a standard that all businesses must follow. This might sound a bit dry at first, but standardization is crucial. Think of it like a universal language for business transactions. Also noted in the document are references to other key materials that guide this mandate, such as the UAE Electronic Invoicing System Guidelines and 2 ministerial decisions from 2025. So, if you're navigating these waters for the first time, it's essential to get cozy with those documents. They're your new best friends in compliance. Segment 2, Key Highlights You Need to Know. All right, listeners, let's move on to some key highlights from this document. First off, one important takeaway. Electronic invoicing is no longer just an option. It's mandatory for anyone conducting business in the UAE. Yup, you heard that right. This includes all businesses, regardless of their VAT registration status, unless you've been specifically excluded. Next up is the timeline for implementing this system. It's being rolled out in phases, which means some businesses might be required to comply sooner than others. This phased approach allows businesses to adapt gradually, but don't stretch it too far. Knowing your timeline is critical to avoid any hiccups. And here's a spicy little nugget for those of you who've already registered for corporate tax. Your participant identifier for electronic invoicing is directly tied to your tax identification number, or TIN, as it's commonly referred to. This TIN will serve as a key element in your invoicing process moving forward. Segment 3, the importance of TINs. Speaking of TINs, let's dig a bit deeper. For those businesses within the scope of electronic invoicing but not required to register for corporate tax, don't panic. You'll still need to register with the FTA to get your TIN. It's like a VIP pass for tax compliance, and trust me, you're going to want one of those. And just a quick heads up for our listeners who might be part of a tax group, your TIN is uniquely yours. It's the first 10 digits of your corporate tax TRN, not the group representatives. Keep that in mind, folks. The details matter. Now that we've covered some of the foundational elements of the UAE's electronic invoicing mandate, let's take a quick break. When we return, we'll jump into those mandatory fields required on electronic tax invoices and commercial electronic invoices. Stick around because this is where it gets especially practical for keeping your business compliant. Thanks for tuning into this episode of Unpacking the UAE's Electronic Invoice Mandate. Welcome back to Finance Forward, your go-to podcast for all things accounting and regulatory in the business world. I'm your host, Your Name, and today we're diving into part 2 of our discussion on the UAE Electronic Invoice. If you missed part 1, don't worry. You can catch up on that episode where we laid the groundwork discussing the context and significance of the UAE's new invoicing regulations. Now let's unravel the specifics of this document, highlighting some mandatory fields that every business needs to be aware of. Section 1. The purpose of the document. Let's kick things off with the purpose of this document. As outlined in the introduction, this document serves as a comprehensive guide outlining mandatory fields for electronic invoices in the UAE. It's crucial to note that this isn't just a standalone guide, it's meant to complement several other critical sources, including ministerial decisions and guidelines laid out by the UAE Ministry of Finance. So why is this important? Because as emerging regulations come into play, being informed ensures your business complies seamlessly. Navigating through compliance can feel daunting, but understanding these requirements is vital for any business operating in the UAE, whether you have a VAT registration status or not. Section 2. Highlights from the document. Now, let's zoom into the highlights from the document that every business owner and finance professional should remember. 1. Mandatory electronic invoicing. Electronic invoicing is no longer optional. It's mandatory for anyone conducting business in the UAE. Yes, you heard that right. This applies regardless of whether you're registered for VAT, so it's time to gear up if you haven't already. 2. Phased implementation plan. The rollout of this system is not going to happen overnight. According to the phased implementation plan laid out in Ministerial Decision Number 244 of 2025, businesses will have specific timelines to comply. This phased approach allows for a smoother transition, but businesses must be proactive in understanding what phase they fall under. Number 3. Participant identifier. Your participant identifier in this electronic invoicing ecosystem will be linked to your tax identification number, TIN. If you've already registered for corporate tax, congratulations, you have a TIN, which will help you navigate this new landscape. 4. Registration with FTA. Not everyone is automatically granted a TIN. If your business doesn't fall under the corporate tax umbrella, but is still within the scope of electronic invoicing, you must register with the Federal Tax Authority, FTA, to obtain your TIN. Section 3. Understanding the mandatory fields. Now let's address the elephant in the room. The mandatory fields mentioned in sections 4.1 and 4.2 of the document. If you're thinking, what exactly do I need to include in my electronic invoices? Don't worry, we'll break it down. 4.1. Mandatory fields in an electronic tax invoice. This might include fields such as the seller's and buyer's details, invoice date, and a detailed description of goods and/or services. A clear structure is essential not only for compliance but also for maintaining professionalism and clarity in your communications. 4.2. Mandatory fields required in a commercial electronic invoice, XML. Moving to more technical territory, if your invoices are formatted in XML, you must adhere to specific requirements that detail how data fields should align. This may sound technical, but don't fret. The goal is to standardize invoicing practices across the UAE, making for a seamless business environment. Closing thoughts. As we wrap up today's episode, I hope you're feeling more informed about the UAE electronic invoice and its mandatory fields. Podcast Episode 3, Navigating the UAE Electronic Invoice Landscape. Host welcome listeners to Episode 3 of our podcast series where we're diving deep into the world of electronic invoicing in the United Arab Emirates. If you're just joining us, make sure to catch up with our previous episodes where we lay the groundwork for understanding the UAE's electronic invoice system. Today, we're going to peel back the layers on the mandatory fields outlined in the document, encapsulated in version 1.0, released on February 23, 2026. There's a lot to unpack, so let's get started. First off, let's talk about the purpose of this document. It serves a crucial role as it outlines the mandatory fields you need to include in an electronic invoice. It's not just a checklist, it's a blueprint for compliance. Whether you're a small business owner or part of a sprawling corporate entity, knowing these fields is essential for smooth operations in the UAE. Now, it's vital that you read this document alongside some key regulations and guidelines, such as the UAE Electronic Invoicing System Guidelines and Ministerial Decisions number 243 and 244 from 2025. These references set the stage and context for understanding your responsibilities as a business operating in this new digital invoicing landscape. Host, now, let's highlight some key insights from this document that every business needs to note. 1. Mandatory electronic invoicing. Yes, you heard that right. Electronic invoicing is mandatory for anyone conducting business in the UAE. That includes every man, woman, and business, regardless of your V8 registration. So, folks, it's time to embrace digital transformation if you haven't already. 2. Timeline for implementation. Don't scramble too much. The transition will be phased. The timeline is laid out in MD number 244 of 2025, giving everyone sufficient time to adapt. But don't wait until the last minute. Start preparing now. 3. Your participant identifier. Every business will have a participant identifier, and this is crucial. It's based on your tax identification number, also known as TIN. If you've registered for corporate tax, you're already a step ahead with your TIN ready to go. But if you're not registered, make sure you register with the FTA ASAP to get yours. 4. Understanding your TIN. If you're part of a tax group, remember, your TIN is not the representative's TIN, but the first 10 digits of your corporate tax TRN. This is a common misconception, so double-check your documentation to avoid future headaches. All right, let's transition to our glossary section, where we simplify some complex terms. Accredited service provider. These are the specialists who are accredited to provide electronic invoicing services in the UAE, according to the laws set in place. They're your go-to experts to ease your transition into this digital space. Cardinality. This term relates to the rules surrounding the minimum and maximum times data fields can be used. Think of it as setting the rules for how thorough you need to be in your invoicing. Understanding these terms helps demystify the bureaucratic language surrounding this process, making it easier for you to navigate your responsibilities. And there you have it, a snapshot of the mandatory fields and important concepts related to the UAE electronic invoicing system. Remember, staying informed isn't just about compliance, it's about empowering your business to thrive in a digital-first environment. Join us in the next episode where we'll dive deeper into the specific mandatory fields required in electronic tax invoices and commercial electronic invoices.